let's talk about Ebitda. What is Ebitda? Ebitda is simply earnings before interest, tax, depreciation, and amortization. Investors, business owners, accountants, financial analysts will understand this. Especially a business owner or an investor needs to know what Ebitda is. What is the essence of Ebitda? And that's what we'll be looking at in this video. We'll be looking at the importance of Ebitda, and we'll also be looking at the formula, and also we'll be looking at the pros and the cons. Let's look at the importance of Ebitda. Why is it important? Number one, it helps an investor to make investment decisions. When you want to invest in a company, you look at the Ebitda. Even though it's not the only metric to look at, there are other metrics, there are other ratios or other figures you need to look at to assess and evaluate, not just Ebitda, but Ebitda is key because it helps an investor to evaluate the operational efficiency, the operational performance of that organization. Have they been performing well when it comes to their core operation, their primary business? So it helps you to laser your focus on the core operations, because by the time you get to net profit, there are so many factors that have been included that may not really reveal the core operations of the business. So you need to understand, okay, how is this business? How is it faring when it comes to its ordinary activity? What it does in generating its major revenue. So that's what Ebitda does. So that's why an investor, a business owner needs to focus on Ebitda. What is number three? The third importance of Ebitda. It's good for comparative analysis. When you want to compare 2 or 3 companies within the same industry, it is good for comparative analysis. Why? You can say, but I could decide to use the net profit. Net profit has already factored in tax, depreciation, amortization, interest. And these figures, these items differ from one company to the other. For instance, a company may be using some of the DGCM method, depreciation. Another one may be using straight line method, while another one is using reducing balance. But when it comes to Ebitda, it helps you to focus, it helps you to compare. You know that there are no extraordinary items in that income statement. So it helps for easy comparison across companies in the same industry. What is the fourth thing? It is a good management tool for setting a benchmark for performance targets. It is a good management tool for setting performance targets, which means we can decide, okay, this is our target for next year. This is our target for next 6 months when it comes to Ebitda, because just like I said in the second point, it focuses on the core operations of the business. So you can use it as a benchmark that, okay, our Ebitda should be this. It's a good management tool. The fifth importance of Ebitda, it is good for valuation. Prospective investors use Ebitda as a form of valuation. Whenever they want to value a company, there is a ratio called EV over Ebitda. We call it enterprise value over Ebitda. So they also use it for valuation purposes. And lenders and creditors can also use Ebitda to evaluate whether a company will be able to meet up with its debt obligation. So quickly, let's look at the pros. Just like I said, the pros is also the importance majorly. So let's look at the cons. What are the cons? What are the disadvantages of Ebitda? Why is it that some people talk it down? Why is it that some people don't even evaluate it at all? They don't even know what Ebitda is. The number one reason why many people don't really value Ebitda is because it is being ignored by both IFRS, which is International Financial Reporting Standard, and US GAAP. It is ignored by both IFRS and US GAAP. So once we are looking at the financial statements, you can't find the Ebitda there. So you are saying that what is the essence of Ebitda, especially when accountants are working, it's not on the income statements. It is not in the annual report. So you wonder, what is the EBIT to be that important? Why is it not on the financial statements? But shareholders, business owners, investors don't joke with Ebitda. Number two, it ignores changes in working capital. Whatever changes that occurred during the year in your working capital, it is being ignored by Ebitda. Ebitda does not take cognizance of changes in working capital. What is number 3? It ignores capital expenditure. It ignores capital expenditure. So it's more or less like, okay, we can't really know what's really happened with capital expenditure. That's even a major reason why some people even ignore it. That's okay, we don't even know what happened with capital expenditure, but that is one of the reasons why you also have your cash flow statement. So that's why I said using one metric, which is EBITDA, is not enough. No single metric is enough to judge a company, to judge the performance of a company. You need to use a combination of metrics. You need to use a combination of ratios to judge the performance of a company, and also the trend analysis. So that's number 3. Number 4, what is the con? What is the disadvantage of EBITDA? No consideration for the capital structure of the company. It doesn't consider the capital structure. So it's more or less like it only deals with the ordinary activity of the core activity of the business. Meanwhile, net profit, before you could even determine your net profits, you must have deducted interest, which takes cognizance of the capital structure. Which means if you are paying interest on your loan, it should have been factored in before you get your net profit. But EBITDA ignores that. And what is the last one? It ignores cash flow needs. Anything that has to do with movement of cash, it ignores it, because income statement is on an accurate basis. So it ignores cash flow needs. So the last thing, what is the formula? The formula, we have to, once you have your income statement, you say net profit, you add back tax, interest, depreciation, amortization. Or you pick the operating profits, or you see something like EBIT, and you add back depreciation and amortization. So that is just what I have for us in this video. So if you are yet to subscribe to this channel, kindly do by clicking on the subscribe button and click on the notification bell so that I can be notified whenever we release a new video. So we'll meet in our next video. Stay blessed.